All right, we're having some technical difficulties with my screen share this morning. It's been a while since I've had to share from my laptop.
Thanks.
Can anyone see the understanding the preliminary title report?
No.
No, of course not. Okay, I'm going to open it back up. To my screen share. Sorry for that.
There it is.
There it is. So give me one moment. We'll get it full screen. Okay. All right. Just a quick commercial. If you have not tried this already, your buyers will now have the option of sending in their earnest money deposit through a mobile deposit link that your escrow officer can send them as soon as we have the contract. It's quick, it's easy, and it will save them a trip into the office. If they prefer to come in, they are still welcome to. However, a lot of times people would just rather take advantage of this simple process and get their receipt immediately. If you have any questions about how this works, you can ask your Chicago Title sales exec or your escrow officer. We are also reminding everyone that we are sending out digital opening packages for your buyers and your sellers. This is not because we don't want to talk to your clients, but if they will go through this questionnaire, the information that they share with us in this digital opening package is delivered securely straight into our system. So it helps prevent wire fraud. It helps us get the information directly from your clients. And it's a very simple process for them to go through. It also helps us know what to look for in the escrow. Again, if you have any questions about how this works, reach out to your sales team or your escrow officer. And if your clients have any questions or don't feel comfortable that this actually came from us, they're welcome to call us. But again, we're just trying to keep everybody safe and enable your smooth transactions. For our realtor clients right now only, hopefully expanding to lender clients sometime this year, we do have the In Here portal where you can track all of your transactions, get copies of certain documents after close of escrow. This is a main focus of our technology growth this year. And if you have an escrow with us, you should get an invitation to have an account in here. It only works if you have an escrow with Chicago Title. But if for some reason you missed your window of signing up in a current escrow, just reach out and we'll get you squared away. That is it on the commercials. And now take it away, Darrin.
Well, good morning, everybody, and thank you again for joining in today's Zoom class. Hopefully, I don't bore you to death. I know talking about title insurance isn't the most exciting thing in the world, but if I hear anybody snoring, I will forgive you later. What is the preliminary title report? The preliminary title report is an offer to issue a policy of title insurance covering a particular estate or interest in land subject to stated exceptions. What the report does is it's a report issued prior to the close of the transaction. And what it's more or less doing is letting the buyer, the lender, and even the seller know what our company has found as items that we are not willing to insure against. Typically, that is the most common misperception of what a preliminary title report is. Let's take car insurance. You pay a fee, and then it covers you for anything that happens to you in the future. Title insurance is just the opposite of that. You pay a one-time fee, and it covers you from the time you close backwards in time. anything that appears on a preliminary title report or a policy of title insurance are items that we are not willing to insure against. The reason for not willing to insure against them is because we let you know that they were out there and that they existed prior to your close. Go ahead and click the next one. Really want to take a look at your preliminary title report if you're an agent or, or you're the buyer, because it's going to show any type of item that may be a problem will show up on the preliminary title report. If you have a problem with the vesting or there's requirements that our company is going to need to be taken care of prior to close. So since these exceptions may point to potential problems with your intended purchase, is important for all parties to review the report once it's received. In fact, our company requires that the buyer actually sign stating that they have been provided, read, and understand the preliminary title report. The preliminary report contains relevant information, so the parties to the transaction will become aware of matters which will not be insured against, as we just spoke about. The preliminary report is designed to provide an interim or preliminary response to an application for title insurance. This report is made solely to facilitate the subsequent insurance of the title policy, and the insurer assumes no liability for errors on the report. Accordingly, any claim arising from a defect in title must be made under the title policy. What that more or less is telling you is when we issue the preliminary title report, that's all it is a report. It's not an offer to insure, and it's not a policy in itself. The policy would happen after we close the transaction, and the preliminary report would then be turned into a final owner's policy for the buyer and a lender's policy for the lender, if any. It is important for all parties to review the preliminary title report. Like I stated, they have to read it, understand it, and actually sign that they've been provided a copy, and that has to be presented back to escrow. Next slide. The big four things to look for on the preliminary title report. Your name on title, that's very important. As we go through the preliminary title report, we'll show you sections of it where, it shows what we believe the vested owner of the property to be. It's also going to be showing liens, voluntary and involuntary. A voluntary lien would be such items as a institutional lender deed of trust or anybody else's deed of trust that you sign stating that you're going to borrow money. An involuntary lien would be things such as abstracts of judgment, federal tax liens, child support, unpaid homeowners association fees, and so on. It's also going to have number 3, which is restrictions. Not all properties have a restriction on it, but the majority of subdivisions, single family residents do have some type of CC&R, covenant, condition, and restriction. It can be something as simple as stating that you can't park your RV out front, and it may be as complicated as saying what color you can paint your house. So, it's very important that you read and understand the restrictions on the property, especially for a new buyer. They may not be aware of some of the restrictions that they have on the purchase of the property itself. Types of title policies. We issue a owner's policy to the buyer. This covers any type of problem that may arise on the ownership of the property. Part of that policy is assuring that the buyer that they are the fee owner of the property and that nobody else has any type of claim to the legal vesting of the property. We issue those to the owners, and then we also issue the lender's title policy. Most all institutional lenders are going to require a title insurance policy that protects their interests, that allows them to know exactly what type of other deed to trust may be out there, liens, problems with the title, and so on. The lender's policy protects the lender against loss due to unknown title defects. It also protects the lender's interest from certain matters which may exist but not being knowable at the time of the sale. This policy but this policy only protects the lender's interest. It does not protect you. That's why you need an owner's policy as mentioned above. The two separate policies, the owner's policy only protects the purchaser or the owner of the property, and the lender's policy only protects the lender's interest. It does not protect the owner's interest. That's why it's very important that you obtain an owner's policy of title insurance when you're purchasing the property. Those matters shown in the preliminary report as follows: the interest, the estate or interest covered. Most of the things you're going to be dealing with will be a fee interest. We also insure leasehold interest. That's more on the commercial side. That would be where somebody, let's say, owns a big complex commercial building, and they're leasing the building out to, Target or a Walmart or whatever else it may be. The Target and Walmart would probably want a leasehold policy. It's very important for you to understand as agents or even as lenders, because when you get the preliminary title report, it's going to show the interest of the property, of how they own it. If it says a fee, this is good. This is what you want to see. If you shows a leasehold interest, then your party really doesn't own the ground. They just have an interest in leasing the building. Go ahead, next one. It's also going to show the parcel of land involved. It's going to be the legal description of the property. Every property has a legal description. We do not insure as to address. We don't insure as to assessor's parcel number. Our policies are all insuring as to the legal description of the property. Next one. The exceptions, liens, encumbrances, and other risks which will not be insured against if a title policy is issued. Other requirements, provisions which are reflected as notes in the preliminary report, which are removed and when a title policy is issued. When you're looking through, as we start to look through the actual report itself, you will see that we have the Schedule A items, the Schedule B items, and then the notes. And in the notes sections, we'll put requirements for like statement information. It's going to also show who we think the proposed buyer on the transaction is, things of that nature. It also will contain assessor's parcel map. This is just a map issued by the county assessor showing what the property physically looks like and some of the dimensions. Again, we do not insure as to those assessor's parcel maps. They are issued by the county just for taxing purposes. Okay, so if you really want to understand what a preliminary report is, after this class is over and you guys get a copy of the recorded meeting that we had today, read this first page, because it really explains exactly what a preliminary report does and what it is. And we'll just kind of read off the side a little bit. This paragraph specifies that no liability is ever assumed under a preliminary report, and further indicates what should be requested if the customer desires assumption of liability prior to the policy. Next page. Okay, the overview of the preliminary title report. Go ahead and click the next matter. Okay, so this is very self-explanatory. That's the title order number. Remember, you're going to have an escrow number on the right-hand side, and you're going to have a title number on the left-hand side. Typically, they will match if the order is in the same county, but they will not necessarily always match. For example, if you are opening an order with the escrow officer at Chicago Title in Fresno County, and the property is sitting in Tulare County, then the title number will be for that Tulare County office, and the escrow number will be for the escrow officer in Fresno. So they may be different. It's very important to really understand that. Item number 2, property address. This just identifies the address of what's being searched. Typically, and when you open an order on your PSAs, you provide us with a physical address of the property. We're just letting you know that this is the address that was given to us to open up the order and issue the preliminary title report. Item number 3, this indicates the date and time that matters affecting the title of real property therein have been examined and reported in the preliminary report. Every day documents are recorded in the county. And as such, every day they update their computers and we grab that information to our computers. And this would be the date that we have searched the property through. If you opened up the order today and you got the report today, that date is typically going to run about 1 week to 2 weeks behind the actual physical date of today. The reason for that is it takes time for the county to get the documents, film them, and then make them available for us to upload into our computer systems. So don't let that concern you. Always remember that that date is always fluid. We will always continue to update that up into the date and time of recording, because our policy, when it's closed and issued, will be for the date that it physically recorded with the county recorder's office. This section right here tells you what the contemplated types of policies to be issued are. As we spoke about, we typically issue owner's policies and lender's policies. In this particular case, the default policy for Chicago Title when it comes to residential property is the Alta Homeowners Policy of Title Insurance. And then right under that, you'll see Alta Loan Policy 2006. So what we're saying here is we've been asked to issue an owner's policy to the new buyer, as well as a lender's policy to the institutional lender. This section is showing you what your interest in the property is. What you want to see here is a fee. A fee simple is the highest type of estate or interest an owner can have in land, freely transferable and inheritable, and whose owner is entitled to possession. So that's what you're looking for there. If you don't see anything there or it says leasehold, give the escrow officer a call. Make sure that everybody understands that, this sale is for, the lease of the property and not a fee title. But majority of what you're going to be dealing with on residential transactions and typical sales, you're going to be seeing a fee. Then next one, section 2. This is where we're going to put what we believe the county records show to be the physical owner of the property. In this case, it's John Jones and Linda Jones, trustee of the Jones Family Trust, dated January 15th, 2010. Well, why is that important? Well, if you're the seller agent or you're the buyer's agent, and some guy named Fred Jones comes up and says, hey, I want to sell my house, and you enter into a purchase sale agreement and you find a buyer, and then the preliminary title report's issued and we don't show Fred Jones being the owner. We show John Jones and Linda Jones. Well, that's a good time to start raising some questions. You may want to go back to your owner or the person who opened up the order with you and say, hey, we don't show you to be physically the owner of the property on the preliminary title report. Is that necessarily a problem all the time? No. Maybe it was their parents' property and their parents have passed away and they're getting the property through some type of decree, probate, or things of that matter. But it is one of those things that you want to look at. You want to make sure that the person who's opened up this property to sell with you is actually the vested owner of the property. The next section is, we talked about earlier about the legal description. This is what we're saying the legal description of the property will be. In this particular case, it's a single family residence, a basic lot and tract subdivision. It's going to have the lot number, the tract number, the city upon which the property lies, the county upon which the property lies, as well as the recording information for the recorded tract map that created this legal description. Sometimes if you're dealing with property up in the foothills or in the mountains, Shaver, Bass Lake, wherever it may be, you may get a different type of legal description there. It may be a meets and bound legal description. This is okay. Everything's not lot and tract subdivisions. Sometimes you'll get a sectional piece of property and that description will be long, lengthy, and talk about, linear feet and chains and things of that nature. Don't let that concern you. It's just the way the property description came down of record. Now let's talk about matters in the preliminary title report. Matters in the report are shown in the exact order of how they affect the property. So the very first item we're showing is taxes. Item number one, this is an older report being presented to you. Right now, since we're in the year of 2022, that item number one will show the property for the tax lien or physical property taxes, which are not yet due and payable for next year. It would say 2022, 2023. That's because we don't cover any taxes in the upcoming year that have not been assessed yet. Item number two is the actual current property taxes as they sit right now. Why are we showing these taxes up here at the very top? It's very simple. The county gets their money first. Like I said, we show the items and how they affect the property. I don't care if you have $1 million deed of trust on your property, a $5 million deed of trust, the tax collector gets their money first. And that's why we're showing them as the top couple items on the report. Reason is if you don't pay your taxes for 5 years, the county will sell that property at a tax sale for non-payment of taxes. And those will actually be, those taxes would actually wipe out any type of deed of trust that was recorded after the taxes. So, you know, it's $1 million deed of trust and you have, you know, $50,000 in back taxes and you don't pay them, then the county will sell that property and it will wipe out that first deed of trust for $1 million. This is the reason that most lenders, when it comes like FHA loans, things of that nature, they require mortgage tax insurance where, you know, you're as part of your payment, you're paying your county taxes. That way the lender can make sure that your taxes are being paid and they don't have to worry about being wiped out by a tax sale. Item number three is just what we were talking about. Now this shows that the property's tax defaulted because they have not paid their taxes. What we typically do is show 2 months in advance of how much it would cost to bring those tax amounts current. Item 4 is the lien of supplemental taxes. The reason we have this item here is because as a title insurer, and we go to close and we record and to say, Mr. Jones is selling the property for $100,000. And he bought the property back in 1940 for $5,000, right? Well, as long as he's never transferred that property, then he is still paying the taxes based on the rate of what he purchased the property for in the 40s. So he's paying the taxes on a $5,000 amount. But when he goes to sell it, that new buyer is going to be purchasing the property for $100,000. The county is going to see that and go, so now the property is worth $100,000 and that new buyer will be paying taxes based on that $100,000 amount and not that $5,000 amount. And since the tax collector only redoes the tax bills once a year, in order to collect their money, they created what's called the supplemental tax. And it's a tax that they will give to you after you close, will be sent to your buyer saying, okay, this is your tax bill, and now you have to pay us since the value of the properties come up. That is not covered in the title insurance policy because those are taxes that are going to accrue or become due and payable after we've already closed. Next section. This is a Melrose tax. Not all property has a Melrose tax. It shows that the property is within the district that has a Melrose tax, which are included in the annual tax bill. Also states that these can be stripped from the taxes and foreclosed upon after the failure to pay said taxes. Well, why do we show them? Since even though that they're paid in the county taxes, because we're just letting you know that they exist. And part of your tax bill is this Melrose, or it may be a 1915 Act bond. It may be Fresno Metropolitan Flood Control District. We're just letting you know that that amount does exist and is out there. Item number 6, the covenants, conditions, and restrictions. We talked about this a little bit earlier. The covenant, condition, restrictions are Things that are recorded are stated that are restricting the property. It may be something as simple as the color of your house. You know, a lot of homeowners associations on PUDs don't want you painting your house purple. So it might be in the restriction that, you know, these are colors that you can't use and these are ones you can use. It may say that you can't park your RV out front, that you can't have your trash cans out front. You know, it's the scope of that. It depends on how the restrictions were written. Understand that when you're reading the covenants, conditions, and restrictions, copies will be provided to you to present to your buyers so they can read through them. You also will see that there was a modification of the restriction on this particular exception. You also see that it says covenants, conditions, restrictions, but omitting any covenants or restrictions of any, but not limited to those based upon race, color, religion, sex, sexual orientation, from familial status, marital status, disability, handicap, national origin, ancestry, or source of income. Well, why does that verbiage in there? Well, I'll be quite honest with you. A lot of the old covenants, conditions, and restrictions from the early 1900s, you got to understand, Fresno County was established around 1883. And so even though restrictions may have been from the 1800s or the early 1900s all the way through the 60s, you may see some very offensive language in there. You may say that you can't be Black, you can't be Armenian, you can't be Turkish, you can't be a Catholic, you can't be a Christian, you can't be a Muslim. All sorts of different verbiages in those restrictions, because back then it was okay to put that in there. You know, nowadays we all know that that is, you know, obscene to even think about. But as a title company, we can't just mark those things off because it's a recorded document. Because I'll tell you what, I would be offended if I was of Armenian ancestry and I, you know, wanted to buy a piece of property and I'm reading through the restrictions and it says that you can't be an Armenian and live on this property. Well, that would offend me. I don't know about you guys. Some of you guys may have a little thicker skin than I do, but I just want to let you know that anything that has to do with those things that are listed in that restriction, as you can tell, color, religion, sex, sexual orientation, which is a new one. You know, it constantly is changing. Anything that reads like that is automatically stricken from the restrictions by federal law. They do not apply, but know that we can't just black them out so people don't see them, just because, you know, it's a recorded document and we can't do that to a recorded document. Next one. Easements. These items indicate that there are easements of record affecting the land for stated purposes. We're clearly defined. The location of said easement will be set out. These can be dedicated on a filed map or recorded in an instrument at the recorder's office. Lots of different types of easements. Easements can be for public utilities such as PG&E lines, telephone lines, internet lines, fiber cable. It can be for the ingress and egress to the property. It can be for a well. It can be, and there's just many things. Why is this very important? Well, I think it's very important, and I'm going to give you a little story. Let's say you're representing a new married couple in their 20s, never owned a piece of property. They're buying their first piece of property. They love the house. And if the wife and husband go out to look at it, and she's out in the backyard and she's looking around, and if she's anything like my wife, she's already decided exactly where she's going to build her barbecue and put her pool, and she's going to have a spa over here, la, la, la. They buy the property, they go down to the city or the county to draw their permits, and they're denied. She wants to put her pool in and they say, no, you can't. And she says, why? Well, maybe there's a gas line, a public utility easement that runs right down the center of their property. Well, she's going to be very upset. And the first thing she's going to do is she's going to come back to who? The agent. And she's going to start yelling at the agent. How come you didn't tell me about this gas line that's running through my property. And the agent's going to get on the phone. They're going to call the escrow officer. How come you didn't tell me that there's a gas line running through the property? Escrow is going to then call the title officer and say, Darrin, how come you didn't tell us there was a gas line running across the property? I'm going to pull up the preliminary title report and look at item, in this case, we'll say item number 7, and said, hey, we let you know on the preliminary title report, here it is, public utilities easement, various strips of land 6 feet in width, lying within those lots, bounded, so on and so forth. And it's on your policy and it's not covered. So it's very important that you actually look at the easements, not that you have to understand them completely, but I think it's very important as agents that if a customer asks you what this is, you don't have to be a title officer, but as long as you have a general idea of what the easement is and what it's supposed to be doing, it makes you look a lot better in the eyes of your customers. And as we know, this is a repeat business where you really want to get referrals from customers you've already served. You know, some easements will be right across the property. Some will be maybe right in the front. Maybe there's an easement on your property to say you're buying out in the country a little bit. And, you know, you're going to go out there because you're tired of the city life and you want to be left alone. And you buy this 70 acres of property and you have a little house on it. And then all of a sudden somebody's riding their ATVs right next to your house and causing dust and problems and things of that nature. And you get upset about that. And you call your agent, hey, da, 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 da. Well, come to find out that maybe there's an access easement going right across the property that they can get to their property, you know, a little bit down the road from yours. So just make sure you look at those, make sure you understand them. We will try to actually give the legal description of the easement itself, but a lot of times, especially in the older easements, they didn't give a legal description good enough for us to actually draw what the easement looks like. But that's just the way it is. You know, back in the old days, an easement may have said, okay, I'm going to start on the north side of my property. I'm going to ride my horse for 15 minutes north to the big oak tree. And then I'm going to turn southeast at a gallop for 20 minutes while I smoke a cigar and stop right there. And then I'm going to go down south. So sometimes the descriptions are like that. They're not plottable. They're not something that we can put out there. The only problem is it's still an easement. It's still out there. If you have an easement like that, you just have to really just determine how much you want the property. And, you know, nothing may ever come of that easement, but if it does, we just want you to know that it's not something that we're willing to insure against because we did let you know about it. Okay, moving on. Deed of trust. This is where we're showing if they have a money encumbrance. Now, remember how we spoke about how we show things on preliminary title report and how they affect the property. Very first one, you're going to have your taxes. They get paid first. And you're going to have your bonds. They get paid first. And if you notice, item number 7 and 8 of this was public utility easement. The first one, 1991, it recorded first. So it's shown first. Item number 8, a 1993 easement. It's shown after that because it was recorded second. Now here comes the deed of trust. So in 2012, they take out a institutional lender deed of trust. So we're showing that and reflecting that there. Now, the only time that we will change the recording order or how they affect the property is, let's say you have a deed of trust here, but the lender, let's say they didn't want to loan the money unless that the person who had the easement would subordinate to them. So if the person who had the easement subordinates to the deed of trust, then we would state that this deed, that under that easement, that the item has been subordinated to, and then show the recording information of what now has become senior to that. So you have your institutional money deed of trust here. There may be more than one deed of trust. You know, a lot of times, you know, people have multiple loans on their property. They buy their acquisition deed of trust, and then maybe 5 or 6 years down the line, they took out a little equity deed of trust to build a pool, a spa, things of that nature. So, you know, just because there's more than one deed of trust don't let that concern you. Typically, if they're getting a sale transaction, the new lender is going to require that escrow actually pay off those deeds of trust. And as long as they're being paid through the escrow, we would eliminate those on the final policy to the owner and the lender. Next, solar energy system contracts. This is becoming very popular in the Central Valley. Why? Because we have an abundance of sunshine. You know, the sun shines here 80% of the year. And so, you know, it's very beneficial for people to have some type of solar on the house, reducing the cost of their PG&E bills and so on. So right here, what we're saying is the solar energy system contract. This indicates that a solar energy system is presently located on the property, and terms of a recorded contract are in effect regarding this system. You have to understand that solar systems are not part of the real property. They are considered personal property. Well, why is that? Since they are connected to the house is connected to the ground. It's very simply because if you don't pay the solar company for their solar equipment, then they will come remove it. No, come take it off your house. You don't pay them, they'll come get it. And that's why we consider it to be personal property. As you can tell under this exception, we have the note, the company requires a separate termination of contract, and that said termination of contract be submitted to the title officer for review in order to remove this exception. So we're going to require, if you're selling this property to a new buyer, well, what happens if that new buyer doesn't want the solar? Right? So they want that taken care of. They want it off. Well, the solar company can come take the equipment off the house, but we're going to require that they actually record a termination for that solar contract. Now, if the new buyer wants that solar equipment, that's great. Let it sit. But we're still going to require that they terminate that original contract with Jane Doe and re-record it to put the new owner, the new buyer, as the person responsible for the contract with the solar company. So just keep that in mind. This is becoming more and more prevalent in the central San Joaquin Valley. The item under that is, this is the solar financing statement. So when they bought the solar, they had to finance it. They didn't have the 10 grand, let's say, to put the solar system in. So they financed it. This is what we would show as the financing statement. It just shows who the debtor is, who borrowed the money, and who the secured party is, and the recording information. Just like any other money encumbrance, if the new lender wants that to be removed, then we would require that Sunbeam Solar do a termination of the financing statement, getting rid of it of record, so we can ensure the lender as to first lien position. Next one. Okay, trust vesting. You know, this is becoming more and more popular recently, about putting property in trust. I'm not an attorney. I'm not an accountant. I'm just a lowly old title officer. But the reason that most people put property into the trust is it avoids probate. It avoids taxing, inheritance tax, things of that nature. Well, how does it do that? You put the property into a trust. The trust holds the property. It has trustees that are in charge of administering the trust itself. And I'll just kind of read it to you. A statement wherein it specifies that because of ownership is in a trust, it must be reviewed for the insurability and copy of the trust, including amendments, and a trust certification will be required. So as a title company, if we find that the vesting is in a trust, we're going to put this exception in there, because we're going to require that they actually provide us a copy of the trust itself. This will show us who the actual trustee who is able to sign on behalf of the trust is. It will actually tell us who the beneficiaries of the trusts are. So we can just be confident to know that we have the right party physically deeding the property off on behalf of the trust. The trust certification is a separate document that we ask be provided It's provided by us as a title insurance company to the seller to fill out. And what it does is it more or less just attests to the fact that they say that, yes, they are in fact the trustees of the trust. It gives us some information about the trusts and so on, but we will require that we be provided a copy of that. Another reason we ask for the actual copy of the trust is, like we talked about earlier, where you may not see the same party as the vested owner compared to who's opened up the transaction with you. This is a perfect example of that. Mom and dad have the property in a trust. Mom and dad are now deceased, and there may be a successor trustee who's going to be acting on behalf of the trust. And that person who opened up the order with you may be the successor trustee. But we want to make sure that we have the right parties deeding the property off on behalf of the trust. So that trust itself will actually tell us the name of the trustees as well as the name of the successor trustee that they have named to sign on behalf of the trust. Also, please remember that when you have a trust in title, you need to have a bank account in that trust name. Because when the transaction closes, the escrow officer is going to cut those funds back to the trust, not an individual. And so when you go to the bank to deposit that check or cash that check, you're going to need to have an account open in that name of that trust. Otherwise, the bank won't accept it. You can't come back to us because we're going to say no. By law, we have to cut those funds back to the trust. The trust was the seller. The trust is where the money is going to be given back to, and then it's up to the trustees to administer that money through the beneficiaries of the trust and pay them all off. Next one. Okay, these are the notes. We talked about the notes, other requirements and revisions which are reflected as notes, which are removed if and when a title policy is issued. So all these little notes that you see here, note 1, note 2, note 3, all these notes will go away on the final policy. But why are they important? Well, perfect example is you'll see in here, you'll typically find wire instructions in the notes section. But let's look at note number 5. This is telling you, this is more or less for a lender, because a lot of times lenders want to know if this property is being flipped constantly, every 6 months it's being sold. So we put a note in there, and our typically we go back 2 years. So we're saying there are no conveyances affecting said land recorded within 24 months of this date of this report. So we're stating, on the chain of title that there's been no conveyance deeds within the last 2 years. Note number 6, again, this is typically for a lender. The lender is going to want us to issue a 116 endorsement, which states what type of building actually sits on the property. In this particular case, it would be a single family residence. So we're note number 7, you can see we're stating that the company is not aware of any matters which would cause it decline to attach a CLD endorsement form 116 indicating located in said land a single family residence, blah, blah, blah. These are typically for the lender. The lender is going to pay attention to those. It doesn't necessarily affect a owner or a buyer, because we don't issue 116 endorsements on owners' policies. Then it goes down and talks about federal laws, things of that nature. Still read. Go ahead and go to the next page. Still go ahead and read the notes section, because it is very important that you kind of understand some of the things that are in there. Also in the notes section, you're going to find all the different types of policies that Chicago Title issues. CLTA owners, Alta extended, Alta lenders, so on and so forth. And it breaks down and more or less tells you what those policies will insure against and what they will not. So it's also a good place to look if you want to kind of peruse it and see what the difference between the coverage of a CLTA owner's policy compared to an Alta extended owner's policy. It's going to break down the differences between there. Attached to the preliminary title report, you're going to have a map. This is a copy of the assessor's parcel map. Up in the right-hand corner, it says map book and page number. This is map book 123, page 45. Then it has just a basic disclaimer, because again, we don't insure as to the square footage or the acreage of the property. We insure as to the legal description itself. So that disclaimer is just stating more or less, we take no responsibility of these footages are off on these lots. And then it has the subdivision recorded map book and page number. So it will actually, even though this is assessor's map, you will actually see that it will kind of have a brief legal description of the recorded map itself. In this particular case, you can see the little black arrow. So this assessor's parcel number would be 123-456-76. That would be the assessor's parcel number on it. It's just a basic way to read the map. Why does the assessor do this? Because they want to have a general idea of all the properties that they're taxing. So it's just giving you just a kind of a bird's eye view of what the lot looks like. It will not show houses on it. It won't show fence lines. It's just going to show you the dimensions of the lots itself. Next page. Let's see, Alta homeowners title insurance policy. There are many title issues that could cause an owner to lose their property or a lender loss of a mortgage investment. Even the most in-depth search of public records performed by the most experienced title professionals may not disclose the most dangerous threat, hidden risks. These risks may not be uncovered until years later. What that more or less is saying is we're not perfect. We do our best to put out a great product, which we do. But we're human, and sometimes we may make a mistake and not show something that was supposed to be shown, and then it could come back as a claim on your property. That's what title insurance is for. That's it. That's the whole purpose of it. If something like that happens, you get a policy of title insurance through Chicago Title, and come to find out that we missed an easement or a money deed of trust. When we wrote our preliminary report and you weren't aware of it when you closed, and now these people are coming back saying, hey, I'm owed $50,000 on a deed of trust. It's recorded of record. It has the correct legal description. That's when a claim would arise with us. What we would do is make you whole. Most times we just pay whatever the amount is that they're owed and get it released of record. So that's why it's very important to get title insurance, because there's things out there. Now imagine if you didn't have a title insurance policy at all, and it was just a handshake deal, and you bought the property, you throw $500,000 down for this house. Well, come to find out there's 4 or 5 different liens on the property, voluntary encumbrances, judgments against the seller that affect the property. You could see you could be wiped out, and they could actually come and take the property away from you. This is why it's very important to get the policy of title insurance. This is why lenders require it, just for that reason. Common title problems. False impersonation of the true owner of the property. Believe it or not, we compare signatures on almost every document to make sure that they are in fact truly the person that are signing. It's funny that most all forgeries that we come across are perpetrated by some type of family member or somebody known to them. Majority of all the forgeries, it's very seldom that just a guy from Albany, New York is trying to steal your property. Typically when it comes to when we find problems with signatures and forgeries, it's typically sons or daughters, uncles and aunts, parents, things of that nature that are forging the documents. So you got forged deeds, releases of wills, undisclosed or missing heirs, instrument executed under invalid or expired power of attorneys. These are some common problems. Mistakes in recording legal documents. Maybe they had the legal description wrong. They had the wrong parties deeding out. For example, if I took title as Darrin Paul Nichols, then I have to deed the property. Let's say Darrin Paul Nichols, an unmarried man. I have to deed the property out as Darrin Paul Nichols. I just can't, deed it out as Paul Nichols or Darrin Nichols. It has to read exactly the same way that I came into title. And we discover a lot of those mistakes when people are recording their own documents, or attorneys are recording documents for them. Another thing that are common title problems is misinterpretations of wills. When it comes to this section, when it comes to wills, just understand we are not judges. We are not the court. We do not read wills and say, oh, Aunt May gave the property to cousin Judith, and now cousin Judith, the owner of that property. We don't do that. That is for the court to decide. They would have to go to court to say they own the property. Darrin Nichols, an unmarried man, and Darrin dies. Darrin's estate is going to have to be probated. It's going to have to be sent to court, and the court's going to make a determination by all the heirs who say that they have an interest on it, who the property is truly belongs to. Then they'll issue a decree of distribution or a quiet title action or wherever it may be, which will then, show us who the property should be vested in. Deeds by minors, you cannot be a minor and convey property. You would have to have some type of person who is taking care of your needs. So this is a very common title problems continued. Okay. And you can just kind of read through there. I don't want to bore you with all the different things, but take a couple minutes later and read through there and just see what some of the common title problems are that we deal with through the closing of the file. A real common one would be judgments and liens. If you're a buyer or if you're a seller and your name is, I'll just pick a John Smith. Well, John Smith has, 5,000 judgments and liens recorded in Fresno County, right? Very common name. It's my responsibility to go through every one of those judgments and liens and make an educated decision on which ones affect my property and which ones don't. Well, why do we have to do that? Because I don't know if you're all aware of this or not, but if you have a judgment against you, it may be a judgment from Capital One credit cards, or maybe somebody sued you and won in court. It affects any and all property that you own. It does not have to describe the property. It does not have to say, give a legal description of the property. All they got to do is record that judgment of the public record against your name, which we will search in the process of issuing our policy. And if you own 15 properties, that judgment affects 15 properties. If you own one property, that judgment will affect one property. So these are some of the things that you'll see in the preliminary title report. So just, be vigilant, look at it, read it, try to have a basic understanding of it. Just remember that, when you're reading a report like that, anytime you have any question, we are here for you. We welcome you guys to give us a call and just ask this question. Hey, item number 8, what is that? How does it affect my property? And we'll do our best to certainly answer any and all questions that you have. I just want to thank you again for spending some time with us today. I don't want to bore you to death.
We did have a couple of questions, Darrin, and some of them got answered throughout, but there's a couple that still need addressing.
Okay.
One is someone asked, will you cover which exceptions will remain in or be removed from the prelim report? I know you stated that if it's on there, we're not insuring it, but is there any other way to know which ones are going to end up sticking or which ones are likely to come off?
Well, it just depends, really. Let's say you have a money deed trust for the seller. Well, that's probably going to come off because the new lender is going to require that be paid. So that would go away. Let's say you have an easement on the property that we're showing the easement. And after looking at it and talking to a couple people, you say, hey, this really doesn't affect my property. Can you look into it more? And we look into it more and come to find out, yeah, it runs to the property next door. Then we can remove things like that. Unrecorded leases, for example, on commercial transactions. Let's say you have a big sprawling complex and you're leasing the property to Dave's Deli. And we picked that up of record. So we show an unrecorded lease in the favor of Dave's Deli, and come to find out Dave's Deli left 5 or 6 years ago. You know, with something as simple as a statement from the owner that they're no longer on the property, and we physically go out and look at the property and see that Dave's Deli is no longer there, then we can remove items like that. So, you know, it's a fluid thing. It just depends on the circumstance. And, you know, say you have a money judgment, and then, you know, in the course of the escrow, that judgment's going to be paid, then yeah, it will go away on the final title policy.
Okay. A UCC one with regard to a solar transfer is normally just the financing statement, correct?
That is correct.
Okay.
And
When
typically
buyers,
financing statements run off the property in 5 years.
okay. And when buyers put a house in a trust after they've purchased, how do we handle that? We won't update anything with regard to that going into the trust, but how does that affect the title policy?
Well, it really doesn't, because as long as, you know, when it comes to this, say you buy a owner's policy of title insurance, and it's Darrin Nichols and Tanya Nichols, husband and wife as joint tenants. And we close and we issue you a policy to Darrin Nichols and Tanya Nichols, husband and wife as joint tenants. And then after I close, a couple years goes by and I start to think about my estate planning. And so Darrin and Tanya, husband and wife as joint tenants, deed it to Darrin and Tanya, trustees of the Nichols 2022 trust. That owner's policy does not die and go away because of just that transfer. But if Darrin Nichols and Tanya Nichols, husband and wife as joint tenants, are the insured, and then a couple years later, Darrin and Tanya Nichols deed it to Zachary Nichols and Joshua Nichols, their sons, that owner's policy dies right then, is no longer in effect. Why? Because our insured is left title.
Okay. A notary has asked that they have some closing packages that required the signer to initial or sign read and approved, which you mentioned, and they didn't know whether to assume that we sent those out up front to the buyer or not. Again, I would say that's an individual question to work with your escrow officer about, because title sends the reports to the escrow officer, and when available, the realtors and consumers, but not in every transaction. Yes.
I agree with that. Our reports will always go back to the escrow officer who opened the order, and it's up to them to disperse to their customers. They typically will send them out in their escrow packages to the lender and the buyer, as well as the seller.
Perfect. That's all the questions I saw in the Q&A. If anyone wanted to unmute and ask one last question, this would be your time to do that. Otherwise, thank you so much, Darrin, for your time today and sharing your knowledge with us. And we will get that recording out by tomorrow.
I'm welcome. I'm very glad to do it. I just like to say to everybody out there that I hope you have a great 2022. Just keep on plugging. And remember, bring all your title transactions to Chicago Title Company.
Thank you so much.
All right. Take care, y'all.
Thanks, Darrin.
Bye-bye. Bye-bye.